Welcome everybody. Pleased to be joined today by two of the founders from Vala Capital, Jasper Smith and James Faulkner. Gentlemen, good to see you.
Hello.
And Jasper, good to see you've got rid of most of the beard, so I can definitely know who I'm talking to these days, but I do anyway. James, I mean, let's sort of start with you. You've been on the Adviser Hour program before. Kind of simple question, really. You know, why would you sort of say, you know, now has never been a better time to invest in enterprise investment schemes?
Yeah, I think, I mean, we're finding it an interesting and exciting time, and that could be a euphemism for all sorts of things. But I mean, I think there's a number of tailwinds to investing in the sector at the moment, particularly through the enterprise investment scheme. And the advisors will know the tax benefits of why EIS. But in terms of the investment in the sector, the UK economy is growing. Whatever the financial indices are saying, the UK economy is set to grow and recover to pre-pandemic levels. The global economy is set for growth, and again, we know the headwinds on those, but the opportunity in certain sectors has never been greater, and I'm sure we'll pick up on that theme a bit later on. Across the UK, it remains a great place, a fertile place to grow businesses. All the opportunity for investment and lending. The government have got a number of schemes in place, including EIS and VCT, but through the British Business Bank, UK Innovation, Business Angels, Enterprise Capital Fund, so those kind of things. So there is lots of opportunity and lots of pools of capital for businesses that want to grow, as well as then having a deep pool of capital, of not just capital, but of employees and talent that can come and join some of these businesses. And again, the UK has an advantage in certain sectors and certain themes. Again, I'm sure we'll pick up on that, but those things combined together mean it's a great opportunity. If you've got a great idea, you put a great team together, there's rarely been a better time to build a business and for investors to access that.
And you're right, we'll pick up on some of those themes. And Jasper, to you sort of next, let's talk about kind of valuations. And we're sort of, let's call this pandemic period one of about sort of 18 months as we're speaking in the kind of autumn. But if you go back to the beginning of sort of 2020, how have you sort of seen the businesses that you're kind of meeting kind of change, or have they changed in terms of the valuation of their expectations of kind of what they're worth? And more importantly, you know, for you as an investor, and you've been a serial entrepreneur yourself, have those valuations come down? Are they more realistic? What is the valuation environment looking like to you?
I think it's a really interesting question. I mean, if you go back a couple of years, we were almost in a bubble, in a sense. There'd been huge optimism in the market, and even when we first heard of the pandemic coming, everyone was sort of ignored it for the first 3 months, and everything would be okay. And then, with the pandemic, you had fear and lots of uncertainty, and that created all sorts of hangovers in the industry, with VCs pulling out of deals, and people obviously working from home and things like that. And so I think where we've got to now is that founders are slightly more humble. Everyone's trying to climb a ladder out of the pandemic, and as James said, there's this sort of very supportive environment that's grown, partly driven by the government, partly driven by VCs and seed investors and angel investors. But with founders, there's this sort of desire to rebuild, which is great. There's a huge number of new companies coming to market, which is fantastic for the sector. And I think if you had an idea 2 years ago, you've spent 2 years at home with a bit more time than you might have had before, thinking about how do you bring it to market, who can I do it with? You might have put some seed funding into it over the last year or two. And so the corridor of deals that's available to VCs such as Vala now is bigger than it's ever been. And there's the great entrepreneurial spirit that the UK has thrived on for decades, is really coming to the fore. So valuations are, I think, reasonable. Founders are more humble. Management teams are looking for support. They're looking for deeper support than just cash. yeah, and I think we're really optimistic and some great deals out there.
And I think the other part of that then is that at our level, the valuations are reasonable. But then what we're seeing is for the companies that are experiencing growth and are maturing, there is a good environment in terms of exit opportunities and for supporting strong valuations. So you've got corporates and the larger corporates who are looking for innovation, who don't do their own R&D, who are looking to adapt, who can't adapt quickly enough themselves to the changing global environment, and are looking for opportunities to buy innovation. And therefore, at a more mature level, when it comes to Series A, B, and C, the valuations of business are being supported by a strong corporate environment for acquisition. So I think those things, hand in hand, are part of that picture of why it's a good time to invest in our kind of level of business.
Absolutely. Interesting. And Jasper, sort of where are you sort of sourcing deals from? I mean, clearly, as a business, I suspect your network is kind of big. And then, any funds that you raise, and we'll come on, I think, to talk about the two EIS portfolios that you've got open. How long do you sort of see the deployment period being on those? But firstly, sort of deal sourcing.
Yeah, I mean, so I guess like most VCs, we'll all talk about we've got lots of sort of fingers in lots of pies and we've got lots of networks that we can tap into. So no different in that respect. We've spent 30 odd years investing in one way or another and building businesses. And you build a network of fellow entrepreneurs, of fundraisers, of commercial partners and things. So we tap into that network and that gives us some proprietary deal flow, which is great. The other thing that we do, which is quite unique, is venture build. So if we see a sector that we like, and we think there's growth to be had there, we'll build the company from scratch, put a management team in. That means that we're very, very close to the proposition, and it's rather than just being a standalone investor, we're driving a lot of the value that's built into that company. As an entrepreneurial-led VC, that's a great thing to do because it enables us to tap into the whole network that we've got and apply value perhaps in ways that we can't if we're just an investor. So it's the blend of a distributed network of contacts that bring deal flow to us, and this idea of actually if there's a sector we really like and we've got some good expertise or we can access good expertise, let's build ourselves. And we found that works really well for us because it enables us to sort of leverage a lot of the skills that are in some of the other portfolio companies and bring those to the benefit of the thing that we're venture building. And in terms of the deployment question, I mean, we deploy slightly differently in each fund. So in our sustainable ventures fund, our growth fund, generally we deploy over a year. It's pretty straightforward to find companies. Obviously, doing the DD itself and going through that process with them and really seeing whether you can go the distance with them takes time. In our second fund, that's obviously much more focused on venture building. So generally, we've incubated and accelerated ideas, and we'll have a corridor of those ideas that we started a couple of years ago that will be there. So we can deploy into that fund, very, very quickly.
Excellent. And just while we're talking about this, what do you believe you kind of bring to the businesses you invest in, sort of, Jasper? Because I think that's again is a kind of an important part. It's money is cheap, isn't it, at the moment with kind of low interest rates. So I'm sure it's not easy kind of raising that money in the sort of first place. But once you've kind of got it, what do you think is kind of the added source as investors that you kind of bring to these investments? Yeah,
I mean, I think if you look at how the biggest VCs in the world approach investing, so Sequoia and Andreessen Horowitz and things like that, most of those big VCs are run by entrepreneurs, and they're run in a way where they obviously deploy capital, but they also deploy expertise. And we see ourselves as shaping in the mold of those companies. We're entrepreneur-led. It's more than the capital. So it's about a journey that we go on with those founders and the companies. And it's about trying to map out consistent progress and be consistent about delivering that progress. And so having run lots of startups myself, as a founder, it can be, very difficult to get clarity, because you've got tons of things going on around you. You've got lots of demands from customers, people, staff, product, reviews, all those sorts of things. And so having a group of people that have done that multiple times to just reference against, I think, is a really powerful thing. So we like to offer mentoring services, we offer corporate structuring services, tax advice, product development experience. We enable people to access the network that we've got. And so if you're a manufacturing business, we've worked a lot in the manufacturing space in Asia and things, so we have a lot of contacts there. We also do something which I think is quite unique, which is plug all of the companies into each other. So we like each company to sign a collaboration agreement, which basically is just an agreement to agree, an agreement to talk. And that sort of 1+1 really works. I think it's a great way of building community. It's a great way of building trust. And each business goes through relatively similar challenges. And so if founder one has gone through that challenge and been successful, that news is really useful to the second founder that might be going through the same thing. And vice versa, if someone's had a problem or a failure, having a support network to help them figure that out is really key. So it's a combination, I think, of real world experience, having been around the block, the blood, sweat and tears that goes into these things, and practical experience around corporate structuring, finance raising, tax planning, and all of those sorts of things. So yeah, I think it's cash plus, and throughout my career, that's it's a thing that's it's a process that's worked really well for us.
I guess it's cash plus, isn't it? Because I think, and unless you've been involved in a business, you don't understand the value of having a kind of just somebody that, a sounding board, a mentor who can just tell you, oh, this is how we dealt with a situation similar, etc. Whether it's as an investor or as a kind of manager, runner of a business yourself.
Yeah, Can I just add in? I mean, we saw some great examples of this, and I experienced this with Jasper, back in April last year, when the world just suddenly became, not quite overnight, but not far off it, a very different place and a slightly scary place. And for a number of the businesses, and for me, who's a less, who doesn't come from the same entrepreneurial background as Jasper and the investment partners, it seemed a bit scary. And some of the entrepreneurs and some of the people who run our businesses felt the same. But you had somebody like Jasper and other guys who were just able to say, look, we can deal with this. We've not had the same, but we've had similar things in the past, whether financial crisis or whatever. We will get through this. This is what we have to do in order to get through the next few months. And I saw that firsthand. And you can only do that if you've been through it one or a number of times in these cycles before. And I saw it firsthand, and it's quite powerful. And you can imagine how deeply reassuring it is to people who are running a business as well. So yeah, it's so valuable, that bit, far more so than the cash at that point, is somebody who can tell you, we'll get through it, this is what we need to do.
And I think you can't run a business from the board. So quite often the approach of being an investor is you join a board and you go to the monthly board meeting, and most founders, most CEOs treat board meetings as a sales meeting, because they're managing upwards, which is what their job is. And obviously, but you can't build a culture in a board meeting, and you can't really fundamentally solve somebody's problem in a board meeting. You can offer guidance, but so it's much deeper than being on the board. It's about intrinsic value applied through sitting with people, talking with people, being consistent, being there, leveraging a network, and so a lot of people say to me, a lot of fellow investors that we meet, they're like, oh yeah, I'm on the board. And it's like, well, that's, great. But actually the board, ratifies decisions, but it rarely can go deeper into the business because of the structure of it. So I think it's a fascinating experience, I feel very privileged to have got to a point where I can add that, add value.
Really good points. James, for sort of advisors, wealth managers, anybody kind of watching this who are not familiar with Vala, you haven't invested with you before, kind of expertise,
Yeah, well, we, allied with all the things that Jasper's been saying about how we support businesses and what's the benefit of that? Well, we believe the benefit of that is that it gives the investors a greater chance of a return. If the businesses have got a greater chance of being successful, then we believe there's a greater chance for the investors to get a healthy return from their investment through Vala. So I think that's the main point. When we came into the industry, coming up to 4 years or so ago, there was a number of things that we said, the way we communicate. We keep things very simple and take out all the jargon. We said our approach to fees was going to be different. So we have a low fee structure, very, very simple fee structure, just so it makes it accessible and easy for people to understand. So I think that's some of the structural stuff. From an investment point of view, we'll perhaps talk in a little while about the two investment strategies we have. But what runs through it is that we've identified a number of themes, investment themes that we think will have the opportunity to scale rapidly. Themes that the UK has an advantage in because of that deep pool of talent and because of historical factors. Things like, people will be familiar with things like financial technology, for example, games development. There's other things like, we can talk about marine engineering as another example of deep pool of capital, great history, ready for investment. We do food and drink. So there's a number of investment themes that we think can grow rapidly for a number of different reasons. We ally that with a deep entrepreneurial experience, and that's where we're going to invest. And over the last 12 months, we've added sustainability as another theme. It's a great investment theme that we think will scale and grow and is growing quickly, that is great for the planet for obvious reasons, but we think because of that has great investment opportunity at the same time. So that's why we pick themes that will grow quickly and offer great investment returns.
Excellent. Now let's a sort of company from each of you, ones that you're individually kind of both very excited about. Perhaps Jasper, to you first.
Yeah, so I'll pick one from our sustainable pot. I think every business has a duty now to try and define itself through a set of mantras around sustainability. And I think, that's gone beyond the nice to have, and it should have gone way beyond greenwashing. It should have gone to a point where fundamentally every business's purpose is to generate sustainability for its staff and for its shareholders, and in the products that it generates, they need to be built in a sustainable manner. But fundamentally, it needs to be sustainable for humanity and for the planet as a whole. And I think if you apply that lens to every investment that you make, it means maybe some of the investments that we would have made 15 years ago probably don't fit anymore. But I haven't seen a business that's come across my desk in the last, year or two that doesn't have sustainability at its core or very close to its core. So the one I would choose is the sustainability group, and I'd choose that because I think it stands out on a number of levels. The management team there is fantastic, set up by Alex Smith and Mike Penrose, both of whom are passionate advocates of sustainability, and both of whom have extraordinary track records in different industries. But as a combo, they are like a super team. They're wonderful to engage with, and they're very passionate about what they're building, and they've got a lot of business sense and a lot of acumen around. And what they provide is a platform, a SaaS platform for measuring your sustainable output as a business. And so you're measured against things like your internal governance, your internal structure, diversity, how your product supply chain works. And it gives you ultimately a score, and it doesn't give you your good or bad, it gives you a score with some targets that you can work towards. And so it gives the whole business a dashboard that says this is how much good you're doing in the work that you're doing, and this is how much good you could do if you did these other things. And that, it's extraordinary to watch how that technology is being applied in large organizations, large insurance or fintech businesses that have taken that on. It's a game changer to how staff work and the business thinks, because actually now there's a dashboard, it's completely open, everybody can see it, and there's a set of KPIs to hit. So that business, I think, has the potential to become one of the most widely used audit tools, if you like. And I use the word audit lightly. Audit tools for ESG and environmental governance. And a great investment for us.
I think one of the things about Sustainability Group is that although they've got some great large corporate customers as well, one of the barriers to ESG metrics and reporting for some of the smaller businesses is that they just don't have the internal resources. If you were looking for a B Corp certification, which is very worthy and a brilliant thing, but it's massively resource intensive. If you're a relatively small business trying to concentrate on growing your business, how do you do these things? Well, what the Sustainability Group have built a system that allows it to be done at a relatively, it's not easy, but a relatively cost-effective and efficient way. So even a relatively small business with a small team can do that, set the benchmark, and then see where they grow and go. So I think Sustainability Group is an exciting one. The other one I wanted to pick up on, funnily enough, is just to talk briefly about, not for me to talk, but to ask Jasper to. We had there was an investment in Hutch, and then we've also got an investment in Playworks, and just to link those two.
Sure,
that's
sure,
right,
sure.
Jasper.
So the games industry is one I've worked in for many years, and it's a wonderful industry in that it's wonderful for a whole load of reasons. But from a financial perspective, it's really interesting because you can get scale without spending extraordinary amounts of capital. 3.1 billion gamers in the world, accessible through two primary routes to market, console or mobile. And there are multiple examples of unicorns being built in that sector. There's also a really strong M&A market. So Hutch was a company we invested in some time ago. It sold for 375 million in December last year, and so that generated a 90 times exit, 90 times multiple for us on exit. It's a great example of going in early, awesome management team, great product strategy, executed really well at a time when the games industry was flying, which it still is, and then sold really well.
Yeah.
And Playworks is similar. It's basically built a network, a proprietary distribution network for its games. It's got a large library of games that it sweats across that platform. It's got global distribution, and it's got a large influencer network supporting that distribution network. So that's seen its business, its revenue double over the last year. It's a profitable business. We've got lots of investor interest outside of Vala for people looking to take strategic stakes in it, things like that. So that's a business where we've sweated hard on that. We started really early with it. We've helped them build the infrastructure. We've helped them build the distribution now. And proprietary distribution is the hardest thing to get in the game space. So this is contracted distribution where you can't be kicked off. It's a very unusual asset. And that business has the potential to go where Hutch went. With all these things, there are no promises in these sorts of things, and it's very hard to read how these things go. But the market is very buoyant. There's a lot of M&A, and Playworks as a business has some really locked-in assets that are actually very, very hard to replicate. It's a business that we're intimately involved with, and the management team's great, and fingers crossed, as they say.
Yeah, well, fingers crossed, and I think we'll kind of watch them. And it's just kind of finally, obviously there's two EIS offerings kind of out there at the moment. I mean, Jasper, just talk through the sustainability one, and then James, you talk through the other offering, the growth portfolio.
Yeah, so yeah, absolutely. So the sustainability fund, the journey for that started for us maybe 3 years ago, almost when we started out with the company, we were like, it'd be great to bring a fund to the market that really wasn't a greenwashing fund, but really focused on sustainability. And we looked at lots of different sectors and how to approach it. Where we got to was that if you look at sustainability as a concept, the best way of applying it is you've got multiple ways. You've got sort of taking out carbon from the production sector or something like that. It's quite a big, heavy lift infrastructure type product, or helping to create technologies that might streamline processes or make sustainability more efficient. And it's really that latter strategy that we're very focused on. So if you look at some of the things we've invested in there, it's things like Good Club, which provide dry goods basically, and changing that supply chain through better packaging or lighter packaging, through home delivery, and through sort of ethical supply chains. Really interesting business. We've got one called Q-Flow, which is around the measurement of materials going into the building industry, run by these two fabulous women founders, which is a big theme for us as well. And they've cornered a market that hadn't really done it, and created a really interesting product that can scale, as a SaaS business can scale almost infinitely. So that's great. So as a fund, what we look for, tech businesses that can scale and create real impact. We look for founders that are committed to sustainability, and we look for each of those companies to have got over several building blocks. So they all have to be at a point when they're generating revenues, where hopefully they're generating profits, and where they're sort of on a solid growth trajectory. So it's a really well encapsulated fund, very well defined, run by day-to-day run by a guy called Jonathan Spanos, who ran the Virgin SME programs before this. So deep experience in helping startups, and very, very committed to the sustainability cause. And I think increasingly for us, sustainability isn't a word; it's a core belief. And I think you can only run a sustainability fund if it's a core belief. And there's a lot of funds that have just got sustainability stamped on because it's a sort of a trendy word. But you have to be much deeper than that.
Lovely. James?
Yeah, so in terms of what we call the British Ventures EIS, and the name comes from the fact that when we were talking about these companies, we talked about great British businesses. So the name was fairly obvious, but it's a maturing portfolio. So when people invest through the British Ventures EIS, typically 8 to 12 companies in a portfolio, and they'll get a diversification comes through in a number of different ways, through the number of companies, through a variety of sectors. We talked across a few of them, things like marine engineering, games. So it's diverse, but they match sector expertise of the partners involved. So food and drink is another theme. But there's also a diversification in terms of the age profile and the maturity of those businesses as well. So it's not a VCT, but in some ways it's got some echoes of VCT, because when somebody invests through the British Ventures EIS, they're going to get access to investments in some of the companies that we've supported for a couple of years, that are doing well, that are growing nicely, that we still have opportunity to put more money into at a growing valuation. Companies like Playworks we've mentioned, Arxon is another one in the marine engineering space that's growing well. Perks is another one. So more maturing businesses that are going through deeper fundraising, and then they'll also get access to a number of newer investments. So they're businesses that we've perhaps known for quite a long time, but we're putting first capital in through the funds as well. So they'll get a sprinkling of newer companies. So companies in fintech like Reving, for example, which is treasury as a service, which is a fascinating business earlier in its life cycle, but I think could be on a trajectory to great growth. So I think in terms of accessing brilliant British businesses in sectors where the UK has a particular advantage with great diversification, then that might be a reason why people would invest in the British Ventures EIS.
Lovely. Gentlemen, I really enjoyed talking to you both. So obviously more details available on the GrowthInvest platform, I know, but also through the Vala website as well. So good luck. I'll keep an eye on some of these companies. They sound really really interesting. But for now, thanks for joining me.
Thanks very much.
Thanks very much.